Hey everybody, it's Brett with your market recap in crypto. A lot's been happening, and so I wanted to give you a recap. Also looks like an interesting week coming up, so why don't we dive into this? Here we see the DXY, and interestingly, it's been in this nice downward trend channel, and we saw it heading lower, so that was helping to fuel the rally in Bitcoin and crypto. And so what we've seen here is that it dropped down below a key support level, rather, and then going into the weekend, pushed back up higher strongly. So not sure what's going on there, and we haven't seen Bitcoin react. We haven't seen much reaction in the crypto markets. Monday hasn't opened yet, depending on when you see this, but as we're recording this Monday, it's over the weekend, and so Monday could see some fireworks, and certainly after downing the Chinese balloon, not sure how the U.S. stock market's going to react, so look for some fireworks here on Monday. So what we want to do is keep an eye on the Dixie here. If it does push up here, and currently we're still in the crypto rally zone, and previously it had pulled down, I thought it was heading down to what I labeled the crypto super pump rally zone. If the DXY pulls down in this region below that key support level, we should have seen some nice big pushing higher in prices, but I think we'll see that, but just not right now. I think we are due for a pullback, and so we'll look into this. If the DXY does break out into a new upward trend channel, though, we want to be wary of that. Pushing in higher in these regions would be the crypto crash new lows, and so if anything happened and we started seeing this heading higher, I don't know, fears with war with China, anything could happen. Probably not likely. I'm not seeing that in the other charts, so why don't we dive into that? And by the way, I am doing live streams now on TradingView, so you can look me up on Brett Fogle there and do some charts and things like that in live streams. So with that, let's dive into our monthly chart of Bitcoin. Here you can see I've got my ERI early reversal indicator. It's one of our proprietary indicators, and on the monthly basis, it's only fired green 4 times, and each time was the market cycle bottom. So I'm paying close attention to this, and also our trend strength indicator below, which confirms these moves going from red to green down below here, and again in 2019. And so we're seeing this right now, which is very bullish. I do want to call attention to in this of 2015, July of 2015. It's remarkable how many times July is the pivot point. We saw 2022 and 2021 when the prices started to push higher. So it's interesting there. But it doesn't mean we can't have a hiccup here if I zoom in on that a little bit closer, because this trend strength indicator pushed up higher and then it kind of went sideways. But what's not easy to see is right in here we saw a dip in price. So I've got that zoomed in on over here a little bit. So we'll come back to this. But right in here we saw a bit of a push higher in that region. Actually, let's see, where did I have that? Yeah, so exactly. So let's see, is it on this chart here? It may be on another one. I had it zeroed in. I had to redo the video. So anyway, if we look at that on this chart, rather, I had it hidden here on, I call it the bear plunge, so I'm going to turn this on. Actually, before we do this, I really want to look at the bullish engulfing candles first here on the monthly, because we do have this big bullish engulfing candle here, which tells me we're heading higher. It's happened so often that I believe in that these patterns repeat, so certainly also indicates investor psychology. So big bullish engulfing candle here and here and here, shot up there and there. So this giant bullish engulfing candle here is textbook. This is an image here, but I do believe we head higher, at least into March. I think we'll head up to 30,000, and then we'll see some resistance there, and then maybe a pullback in that March region. So that's the bullish engulfing candle overlay. The bear plunge is what I was referring to, and so let me come back to this. And all the way back in here is what I was referring to. And basically what happened is we came out of the bottom and we pushed higher, just like we've done here recently in the last month or so. So we pushed higher 50% here off the lows in 2015, and then we saw a 40% correction. So that's not easy to see when you're just looking at the trend strength indicator that kind of went sideways. But if we zoom into this here a little bit closer for right now, what that means is, again, we did push higher 50%, as we know, in January. Let me just turn off this green box here, which is in the way, and to see this a little better. So 48%, close enough off the lows here since December. And so if we were to pull back 40% from these levels, it would put us down at the 14,000 level, which is what we've been watching anyway. Number of reasons for that. This is was the high back in 2019, became resistance here in October of 2020, pushed up through it, became support, flipped support there. So this 14,000 level, if anything were to go haywire and really start to head lower, that would be that next area of support. But I don't think we're going to head that low. We held nicely on this purple support, this moving average here, which is the 100 month EMA. So I think there's another big reason we won't go lower, I believe. So let me turn that off. Let's jump to this chart on the weekly. So I think this is more likely. We're hitting resistance here, this 24,500 level. Number of reasons we'll look at. And so I think we do pull back here and probably find support on this moving average here, the black moving average, which is the 300-week moving average. So that's what I would expect to see. If it did go lower, it may come down to this trend line down here, but I think more than likely will come down to that area and then push higher and break into these higher areas. A couple things though to pay attention to. We are hitting resistance up here on the stochastics RSI at this 100 level. So again, a pullback likely going into this week here. This also is interesting on the RSI because if I can open that up a little bit to see, this key level here right around 56 on the weekly RSI has been both a support and resistance area, key support resistance area over time. And so as I had drawn a couple weeks ago, we would probably likely hit this area and roll over. So it kind of looks like that's what's happening. So short-term pullback. And Bitcoin on the weekly, likely. A couple other charts on the weekly too. These are our proprietary indicators. And by the way, if you'd like to utilize these and add them to your arsenal, just go to moonstream.io/success. Moonstream.io/success. And that's with permission from Max, just to give you some extra tools on how we rely on our charting and mostly for directions here. A couple things here. Looks like it's overbought on my early reversal oscillator and the trend strength indicator here, so I would expect this to roll over a bit, and as we've been saying. Now, we are above the bull market support band. That is good. So another thing we'd like to see here is a pullback and retest the bull market support band before heading higher. So either of these two scenarios, we could pull back here to this 22,000 area or even come down to just below 20,000 here to retest this support level. But that would put us into the bull market support band again. And really what we want to see is the coming up here, like I've highlighted back in August of 2020, we pushed through it off the the March 2020 COVID crash and came up above it, kind of went sideways, pumped up a bit, and then came back and retested that bull market support band before shooting higher. Now, this was the beginning of the bull market. I don't believe we're in the beginning of the bull market yet, but at any rate, good to find support on that bull market support band. A couple other things here, not on this chart. Let me jump over here. Now we've got a couple things here. We've got resistance here on the purple line. That's the 200-week EMA here, so we can see that the 200-week SMA rather. So that has previously been strong support back all the way back into December of 18. It goes back even farther, but held support here in the after the 2017 crash. Also held as support. Notwithstanding the COVID quick crash that came up, and it basically held there, but it did not held this time. So we came down below the 200, down below the 300. So first time that's happened, but this will now act as some resistance here before pushing through. Now here's something interesting. The hash ribbon indicator we haven't talked about. The hash ribbon indicator has to do with miners, and previously to this cycle, the hash ribbon was said to, when it does print buy, that markets, the Bitcoin price will not come back below the recent cycle low, or the recent dip, the recent low rather. And so when this printed, then we were reasonably sure it wouldn't come back down below that. Sure enough, even with the COVID crash, came down right in this region and held. And so we had a few more of the hash ribbon buy signals here. It also shows capitulation. So when the miners capitulate and they start selling, it's a good indication the markets are going lower. So we saw that back here in the summer of 2021, and then we saw that here and here. So we do want to watch that. The buy signal, again, has to do with the miners, and I won't go into detail what it's all about, but what did happen, however, is this blue hash ribbon indicator is one of the reasons me and many people were saying, myself included, exactly, so we're thinking we'd go to 100,000 because this should have signaled we would not go below this little dip. And of course, we had this huge crash here, and so that was violated. However, the buy signal here tells me that we should hold, this should hold as these lows even on a correction. So that's another bullish signal, and which fits with the overall timeline and thesis we're outlining here. A couple things though that are bearish in the short term. You know, we have this upward trend, higher prices on Bitcoin. If we were to overlay the volume's been dropping, but here's what I want you to pay attention to. We have this bearish divergence on the MACD here, downward sloping MACD. This looks a lot like the monthly MACD back in December of 2021 and going into January of 2022. This is what big reason I was telling people to get out of the markets, get into cash, get out of the markets entirely when this crossed below that. So definitely want to pay attention to this. I don't think it's as big of a deal because it's on the daily and these oscillate more frequently, but also having divergence here on the daily with the RSI here. And so you can see that lower highs coming down as price pushes higher. Not a good sign for Bitcoin in the short term. We can hop over to the 4-hour, actually the daily here as well. And let's see, that was the daily. This is the daily as well. So same chart. I wanted to pull up Ethereum. Ethereum hitting resistance right around 1664. So, you know, this can either punch up higher. I don't know. Ethereum probably will roll back here. Obviously, if Bitcoin pulls down and the DXY is going higher too, Ethereum's going to probably come down here and hopefully would, you know, find a higher low based on this kind of trend line and then break up higher. You know, that would be great. We'd see a bullish wedge forming, and that's what I would expect to see. Looking at the 4-hour on Bitcoin, a couple things here. We've got the CME gap that still needs to fill. Another reason, you know, another clue that we should head a little bit lower. And on the 1-hour chart though, it looks like we are in a nice uptrend. I would imagine we could still punch up into this region as a last gap, you know, exhaustion rally into this region on the green. One of the reasons is this Bollinger Band is tightening, still in an uptrend. Doesn't mean it has to happen, but certainly could pump into this area, reject again, and then dump on Monday once the U.S. markets open. And then again, we have this CME gap to fill. Let me open it up here on the 1-hour chart, and this is not my chart here, but it shows where the CME gaps were when we punched up through these areas here, and so the gaps are between 2,000 and 20,000, sorry, 20,000, 2,500. There's a little one here right around 22,500 that we can see, and so this here is not a direct overlay. I would have to squeeze that in a bit on the chart. But you can kind of see this pattern here. It's not an exact overlay, but again, let me move that out of the way actually. So to pull back in the 22,500 range would put us right down in about this area. That's just a mini pullback, but this CME gap, they do tend to fill, and this is a magnet. It's, you know, the prices do tend to get pulled back in there. Various reasons for that I won't go into, but you can look up online. It has to do with, you know, a number of things, but when the markets are closed on the weekend and then they gap up, CME and those exchanges, they don't have to take losses. They can hold kind of those positions and come back to them much later and even those out. So it's just one explanation. So anyway, but that would be healthy if we do pull back and we come down, fill that CME gap, and then we kind of come down and push higher. So it would be great to see sort of something like this. And then kind of bounce hard off of that, and then, you know, going to higher highs again. I think we go into March. February should be a bullish month based on that big bullish engulfing candle on the monthly. So that's all I have for you guys. Hopefully that was interesting. If you like the content here, if you like the charts and like what we're doing here, please like down below and subscribe if it's the first time seeing these. And we'll see you next time. And again, if you'd like to add some of these indicators to your charting, this ERI and TSI has been phenomenal on all time frames for us that we developed. You can find out more at moonstream.io/success, and you can follow me on a little more timely basis at just Brett Fogle on TradingView. So anyway, thanks very much, and we look forward to talking to you next week. See ya.